Imagine this, what you're seeing on your screen isn't the real price at all. Just hours ago, something huge happened, and you probably missed it. The Perth Mint, Australia's government-backed sovereign mint, just quoted $127 per ounce for silver. Immediate delivery, no less. But here's the kicker. Right now, the silver spot price you're seeing is $91.45. That's a $35 difference, and no one's talking about it. The financial media, they're hoping you won't notice, hoping you'll check your portfolio, see silver at $91, and assume everything's normal, but it's not. Something's breaking, and this isn't just about silver. It's about the entire Western vault system, and the cracks are showing. If you're holding silver or planning to buy, what's happening right now could change everything you thought you knew. Stick around. I'll walk you through exactly why this matters and why it's just the beginning. So why does this matter? It's not just about silver prices. It's about a deeper issue that's playing out right in front of us. What happened in Perth isn't an isolated incident. This is a much bigger story that's been unfolding for weeks, and it's happening across the globe. Shanghai was the first warning shot with a strange premium last week, but now the Perth Mint just confirmed it. The Western vault system is breaking in real time, and no one's acknowledging it. You've probably seen the headlines about rising silver prices, but here's the question you should be asking. Why are certain mints willing to quote a price that's more than $35 higher than what's being shown on the mainstream spot charts? It's not just about a difference in pricing. It's a sign that the paper market is losing control and the physical metal is moving elsewhere. This isn't just some small market glitch. The gap between paper silver and physical silver is getting wider by the day, but don't just take my word for it. The numbers don't lie. And trust me, the next move is already starting to form, and it's moving fast. Here's the hard truth. The silver market isn't behaving like you've been told. Just think about it. Perth, a trusted sovereign mint, just quoted $127 per ounce for immediate delivery. That's $36 higher than the spot price you see on your screen. And this isn't a one-time glitch. We're watching the beginnings of something bigger. But here's where it gets truly eye-opening. The COMEX market, the paper market, is completely out of sync with reality. Now, I know what you're probably thinking. This is just an anomaly, right? Maybe Perth is just overcharging due to supply chain issues, but that's not the case. The numbers from Shanghai told us something was wrong, and now Perth is making it official. If you think that's just a temporary blip, I have news for you. It's not. The gap is getting bigger, not smaller. As of right now, silver is more expensive in physical form than it is on paper, and that's a big problem for the entire Western pricing system. When a sovereign mint quotes a price $36 higher than the market, they're telling you something critical. The price you see on the screen isn't real anymore. The real price, it's what's being quoted for immediate delivery, and that price is climbing fast. Now let's talk about escalation. This isn't just a small price difference, it's a massive red flag. Think about it. Just a few days ago, Shanghai was quoting $13 above COMEX. Now Perth is quoting $36 above COMEX. That's not a minor shift. It's a clear sign that the system is under stress, and this gap isn't closing. It's widening. Historically, this kind of divergence never ends well. When physical markets start demanding delivery and the paper market can't keep up, we've seen this pattern before. The most recent example back in 2011 when a similar pricing discrepancy led to a massive correction. But this time, it's different. The COMEX system is built on fractional reserves, and those reserves are quickly running dry. And guess what? The more metal gets pulled out of COMEX, the tighter the system becomes, and the harder it is to stop. Right now, this gap is growing so fast that it's forcing a physical drain, one that the paper market can't control anymore. This isn't a flash in the pan, it's a structural problem that's already in motion. Here's where it gets even more disturbing. The Perth Mint's $127 quote isn't just an isolated example of pricing differences, it's a glaring contradiction. Think about this. While COMEX silver is sitting at $91, Perth is quoting $36 higher. This is where things get critical. The paper market, represented by COMEX, is showing one price, $91 per ounce. But the physical market, the actual silver in the vaults, is telling a completely different story. Here's the shocking truth. If you can buy silver at $91 and ship it to Perth, you're making a $36 profit on every ounce, even after factoring in logistics and shipping costs. Smart money knows this. They've already started moving fast, taking advantage of the arbitrage gap before it closes. And what's the response from the exchanges? Nothing. They can issue futures contracts all day long, but they can't create real physical silver. So what does this mean for the future of the market? Simple. The longer this gap persists, the more vulnerable the entire system becomes. And if this gap widens any further, it's not just the silver market that's at risk, it's the entire Western pricing structure. When sovereign mints are openly admitting that the paper price is a joke, you need to ask yourself, what happens when the real price of silver forces the paper price to catch up? Now let's stack the pressure. We've already seen how Perth is signaling the collapse of the paper-silver market. But what happens when multiple things go wrong at once? First, the Shanghai premium, which was dismissed as a localized anomaly, has now turned into a global problem. Then Perth's quote comes in, confirming the divergence. And now we're seeing vault data from COMEX that shows a steady outflow of physical silver. This isn't just a few isolated events, it's a rapid acceleration of the same trend, a drain of physical metal. The cracks are widening and the system is losing control. Here's the scariest part. What happens if this continues? If the silver that's been in COMEX vaults continues to leave and the market can't back it up, what's left? We're on the edge of a crisis that could topple the entire structure. The exchanges are running out of metal to deliver, and when the demand for physical delivery accelerates, it will force the price to rise or collapse the system entirely. This isn't a flash in the pan, it's a structural problem that's already in motion. Now let's shift gears and talk about the real-world impact. This isn't just a story for traders or Wall Street experts, it's something that affects regular people, and that includes you. If you're holding any silver or looking to buy, here's why this matters. The supply chain for silver isn't some abstract thing, it's real. It's physical, and it has direct consequences for industries and consumers alike. Imagine the panic that will set in when manufacturers start scrambling for silver. Solar panel producers, electronics companies, they all rely on silver. If prices keep rising and inventory gets tighter, they'll panic buy, pushing prices even higher. If you've been on the fence about silver, now's the time to take a closer look. The longer this continues, the more you'll see prices climb, and not just for investors. This is the kind of pressure that hits everyday consumers too. As silver becomes harder to get, it will spill over into other industries, driving up prices across the board. If this feels familiar, say so in the comments. Let's talk about how you're positioning yourself for the coming storm. Here's where things get even deeper. What we're seeing isn't just a case of supply and demand pushing prices higher. There's a bigger systemic issue at play. The reason the paper market is breaking down is because the entire system is designed to benefit from a disconnect between paper and physical markets. You've got futures contracts and derivative products all built on the idea that most people will settle in cash, but that's changing fast. When the price gap widens like this and people demand real silver, the system can't keep up. This isn't just about silver. This is about how systems of power leverage your trust in these markets. The way the exchanges work, the way the banks and sovereign mints operate, it's all designed around keeping you in the dark about the real forces at play. This is why they won't talk about Perth's $127 quote. They don't want you to know how fragile the entire Western pricing structure really is. When you understand this, it's clear. The rules are rigged and those in power are relying on you not noticing how it all falls apart once people start demanding real physical assets. Now let's look ahead. The next few weeks could see one of two things happen. First, the system could scramble to close the $36 gap. The paper market might try to match the physical price, but it's going to take drastic measures, like margin hikes on COMEX contracts or new rules to suppress delivery. But here's the problem. Margin hikes can only delay the inevitable. They can force out smaller traders and push prices down temporarily, but they can't stop the flow of physical metal. The arbitrage is too big. And when the pressure reaches a boiling point, the whole system will either adjust or it will break. On the other hand, if the gap continues to widen and the physical supply runs out, we could see prices skyrocket. Perth's $127 price might become the new baseline, and once silver breaks through that level, there's no telling how high it could go. 140, 160, it's not out of the question. But here's where it gets interesting. Once silver hits those levels, it will enter the mainstream. That's when the FOMO kicks in, the fear of missing out. Investors who have stayed on the sidelines will rush in, and things could escalate even further. But here's the kicker. No one knows which path we'll take. The next move is already in the making, but the timing, that's anyone's guess. Here's the final thought to leave you with. If I'm right about this, and Perth's $127 quote becomes the norm, silver could soar to unimaginable heights. But remember, parabolic moves don't last forever. When the price hits that critical point, expect a massive correction like we saw in 1980 and 2011. The only question is, how long will this phase last before the market resets? The silver market is more fragile than you've been told. The gap between paper and physical is real, and it's growing. Whether you're holding silver or just watching from the sidelines, you need a plan. Know your entry and exit points. Watch the gold-silver ratio, keep an eye on the vaults, and don't get caught off guard by rule changes. In the end, this isn't about speculation. It's about survival in a market that's losing control. The rules are changing. And if you don't pay attention now, you'll miss out on what could be the most pivotal moment in the silver market in decades. If you've made it this far, you're serious about this. Subscribe for real-time updates. Hit the bell to stay informed before the markets open. And leave a comment. What's happening in your area? Are premiums spiking? Dealers running low? Let's keep this conversation going. Stay sharp.